All right. So let's talk about market structure. Market structure 101. We're going to go to USD JPY to look at market structure. It's got the cleanest market structure, in my opinion, right now, as of today. So welcome to 1022 Mentorship. My name is Mason. If you have not been following us, give us a follow down below. We're going to be making trading content, economics, anything trading related, psychology, really just trying to build a community, trying to build a solid community of traders and people who want to grow, people who have the same desires. It's very difficult to make money in today's economy. You need multiple jobs, multiple streams of income. So this is a great way to do that, is to day trade, swing trade, trade in general, invest, make your money work for you. So let's go ahead and get right into it. So market structure 101, market geometry 101, okay? Very, very simple. A kindergartner can do this, on a piece of paper. But very simply put, we have something called market geometry or market structure. That means that the market moves, any market, whether it's a stock, an index, a commodity, a currency, moves in a form where you have buyers and sellers. People are buying and people are selling. The bid and the ask, right? And at certain levels, there's more buyers than sellers, and vice versa, right? Sometimes there's more sellers than buyers at a specific level. Now, if you have a market that's going up, right? If you have a market that is going up, which we are looking at the weekly time frame here, okay, the market is clearly trending upward. You can see that the trajectory is going up. We went from $1, we went from 115 to 155 within the last 3.5 years, right? So we are clearly in an uptrend. And how market geometry works is very simple. You have a move to the upside, and then you have a pullback. You have another move to the upside, you have a pullback, and then you have another move to the upside. You see how that kind of goes hand in hand here. So you have your move up from the lower bound, right? You have your retracement, number two. You have your move back higher, and then you have your third leg there, your pullback, and then your leg higher, your fifth leg higher. Now, the market does not move this clean all the time, not even close, right? Like I can show you, I can mirror this, right? You can see that we have a 1, 2, 3, 4, and we're in a fifth leg right now. You can see the fifth leg printing, but do you see how it's not so pretty on the week? Like on the weekly time frame, it looks okay, but if we drop down to that daily time frame, when we're looking inside of the legs of the market geometry, it's pretty sloppy. And you can see how much chaos is going on inside of the wave. However, it's still the same thing. It's fractalized. We call it fractalization, where the market amplifies the higher time frame on the lower time frame. So you can see it here as well, right? You have a 1, a 2, a 3, a 4, and then a 5. So within the first leg, you literally have the same exact market geometry inside of the first leg, right? And then inside of the second leg retracement, you have almost an identical type of market geometry, and it ends up extending a little bit more. But you can see, right, that the geometry stays relatively the same. It's just the opposite direction. You see that? If I were to make this a little more spread out for you to see, you can see that the market geometry stays relatively the same, right? So with that, with that being said, with that in mind, when we go into the lower time frame to trade, when we're looking for trade ideas, trade concepts, we know we're in an uptrend. So we know that the market geometry is in a uptrend, which would favor long positions, which means that we're going to go down to the 1 hour time frame. We're going to get rid of the thing we just drew, and we're going to zoom in to what we can see on the 1 hour time frame. Now, remember, we're really zoomed in. So we're looking at within the last month of data, which means that the market will have a lot more chaotic feature to it. But the market geometry is still the same. Keep that in mind. Market geometry is always going to be the same, okay? And you can even see it on the 1 hour time frame, right? You have your leg up here, you see that? And then you have your retracement, and then you have your leg up, your retracement, your leg up, your retracement. You see that? And then boom, we end it here before reversing and starting the market geometry the opposite direction. You see that? How it begins the other direction. We see that the market geometry stays relatively the same in the other direction, right? Now, how do we find trades inside of all of this price action, okay? I'm going to drop down now to the 5-minute time frame. I'm going to go to the 5-minute time frame, and we're going to do the same exact thing on the 5-minute time frame, all right? So we're going to look at price here. We're going to go, okay, we have our market geometry, right? We have our low, we have our high, we have our low, we have our high, we have our low, and we have our high. And we have a low. And now we're sitting inside of this range here, right? So now we're sitting inside of this high, and I guess relatively this low. Does that make sense? So we have this high, we have this high here, and then we have this low right here, okay? So market geometry 101 is we take a Fibonacci tool and we draw the fib tool from the low to the high, and we extend it outward. And we look for our 382 50% retracement or our 618 retracement. In a very strong uptrend, which we could go back and look at, in a strong uptrend, that 382 will hold really nicely. When we see a large move up of 127 points, so almost a full percentage, especially on a currency pair, you're not going to most likely see a strong continuation of the uptrend. You're probably going to see consolidation afterwards. However, when you're in a nice strong uptrend, which we can see actually right here, right, you're going to see very nice, smooth 382 retracements. You can see that right here, right? The market moves up, creates that leg higher, right? We create the 1 leg, and then the 2 leg comes down to the 382, and then we create our 3 leg here, our 4 leg here, and our 5 leg higher. So all we do, right, is we're watching price. We wait for a pullback to begin. We take our Fibonacci tool. We take it from the low to the high, and we look for a 382 50% retracement. We go long at the 382 50% with our stop loss below the previous low, and we target the extension or a 1-to-2, 1-to-3 risk to reward ratio, right? Now you can see that we did not quite get there. Let's say we entered this trade position at 154.903, right? Let's say it didn't reach this full peak here. We still had something called a break of structure, which is basic market geometry. So when the 1 leg gets broken here, you have a break of structure, right? It broke this structure level, this previous resistance. And now we take our Fibonacci tool from our 2 leg to our 3 leg, and we look for that 50, 382, 618. We go long with our stop loss below the low, targeting one of the extensions or a 1-to-3 risk to reward ratio. Now, as you can see, the market obviously moved extremely volatile. Was extremely volatile during London session. There must have been some Japanese news. We can go back and look at that. I'm sure it has something right here. So, let's see. Japanese forecasts rebound for yen weakens on report that Japan Prime Minister questioned rate hike plans. So the yen weakened because they decided not to hike interest rates in Japan, or there was talks of them not hiking rates. That means that the Japanese yen got crushed in the trade after that, and it went higher there, so it lost value. But the whole point is market geometry shows you that when you have a nice continuation of market structure trend, you can see the break of structure, right? It breaks structure and you wait for the pullback and you take the trade at the 50,382. You can literally see how price is being supported at the 382. Price is being supported at the 50%. Now, in trading, you're not going to be 100% all the time. You're going to take losses. So if the trade does reverse, right, that means that the market structure is shifting. And what do I mean by that is when the market structure shifts, you actually have to be able to tell when the market's going to shift in the other direction. So that would be like right here, right? For example, you have a change of character, or where the market does not hold a certain level. So then you actually would reverse the trend and look for a retracement the opposite direction, and you would look for short positions the opposite way, if that makes sense. So basic market geometry is your uptrend, right? And then you have something called a change of character. When this breaks this level here, when it breaks this level here, right? That's called a change of character. So we're going to have a level here, right? We have a change of character. We look for a retracement in the other direction, and then we look for that continuation break of structure. So boom, break of structure here, right? Break of structure and break of structure. Whoops, break of structure. Just like that, right? So I hope you enjoyed the market geometry 101. Market structure. Market structure is really important to just having an understanding of where you are in the chart. It works on every single pair. Some pairs are sloppier than others, and you'll find that you will lose trades because the market is chaotic. However, if you have an understanding of the basics of market geometry, you will be able to identify higher quality setups, and you'll be in the direction of the overall trend, which means that the trend is your friend, and you'll make significantly better trades in the direction of the overall trend. So hope you enjoyed the video. We'll see you all on the next one. Take care.